I would argue you have to go harder, faster, and smarter. You have to double down on your marketing. You have to invest more in your team, invest more in your infrastructure, pay your employees well, and be aggressive because this is a once-in-a-lifetime opportunity to gain more market share.
Welcome to the Inside Forbes Council's podcast. Each episode shares transformative insights and advice from members of Forbes Councils, a group of invitation-only communities for successful executives and entrepreneurs. This is Inside Forbes Councils.
Hey everyone, this is Stephen Ganoza. Welcome to Inside Forbes Councils. Today we have my interview with Larry Genet. Larry is a Senior Vice President at CBRE, covering industrial and office properties in South Florida. He is also a member of the Forbes Real Estate Council. We discuss the state of commercial and industrial real estate in the pandemic, the need for brokers to continue prospecting, and how companies are positioning themselves for after the pandemic. For reference, this interview was recorded on April 15, 2020. So Larry, thank you so much for taking the time to do this today.
Thank you.
So you are the Senior VP at CBRE. Why don't you start off by just telling us a little bit about what CBRE does?
Sure. CBRE is the largest commercial real estate firm in the world. Over 100,000 employees, over 400 offices globally. Within CBRE, I run with my partners a 8-person team that focuses on the sale and leasing of industrial and office assets, specifically in South Florida.
So Larry, you're working in industrial and commercial real estate. We're in unique times for sure, right? Like commercial space is just shut down at the moment. What's the state of the market as you see it?
Things certainly have gotten quiet with the mostly mandatory shutdowns across the country. I will say, however, that it does feel like things are opening back up, even if not officially. I'm getting a lot of calls for new requirements in the market from large companies. So that means they're making internal decisions to open back up and get back to operating and reallocating their supply chains. So that's very, very encouraging. We are also closing on multiple sales right now. We closed on one last week. We're closing on one today. And we have a few other sales that are moving forward as well. We're signing leases with medical supply distribution companies. We're signing leases with pharmaceutical companies. Janitorial supply companies are all really bright spots right now. So there's still deals to be had, but there's certainly a lot of frustration and pain out there. But I do think it's working its way through, and it feels like everyone's getting antsy enough that they want to get moving, they want to get on with life. And if you're young and healthy, I think you're chomping at the bit to get back to work.
So given the pandemic response, it sounds like your strategy is more or less positioning yourselves to be ready for when everybody else is ready to go versus maybe shutting down yourselves right now.
Absolutely. So we're really focused, and we have been for the last 3 weeks, on targeting specifically companies that we know will remain active. We were pretty ahead of the curve, I'm proud to say, in targeting pharmaceutical, nutraceuticals, food production, food processing facilities, and just critical distribution companies that are still remaining very active. They're making their current spaces work for the most part, but in some cases they do need to acquire additional space. We were also pretty early at getting in front of the emergency management groups that are out there looking for short-term temporary space for supplies in response to everything that's going on. So our team has been pretty aggressive at going after these groups for the last 2 or 3 weeks. We're starting to see that pay off right now with additional requirements for our vacancies.
So you mentioned this a couple of times already, that your clients have new requirements or new specs that they're asking of. What's changed? What are these new requirements?
Most of the new requirements that we're seeing are related to someone who's either up for renewal and can't renew in their space because it's either been leased to someone else already, or the space doesn't currently work for their operation any longer. So B, they're outgrowing the space or trying to right size within their current operational needs. So a lot of the deals that are pending and getting done right now are deals that have to be done. Otherwise, that specific site, that satellite location, or that corporate headquarters will be without a home, which is for 3 months of a shutdown or however long this lasts. You're not going to make a 5 or a 10-year decision based on 3 months. So businesses still need homes. permanent homes, and they can't be without it. So there are a lot of groups that are up against the line that need to do deals right now in order to be able to open back up when that happens.
What effect is it having on pricing?
So we have not dropped pricing. We don't intend on dropping pricing. The majority of our tenants are paying rent and will do fine coming out of this. So we're not overly concerned on the industrial side. So we have no intention of dropping rents at this time. And I've not seen any indications of a mass fall off in rents or sale prices.
Generally speaking, beyond the current specific situation that we're in now, what's your advice for prospecting in down markets?
It's super important to remain active. You can't let this deter you. You should still be cold calling. You should still be emailing. You should still be DMing on social media, which is something that's not really utilized by the broader commercial real estate market that I think will become more popular as younger brokers come into the space. So we're out there every day cold calling and reaching out to not only previous clients that we've already done business with who may need something from us during this challenging time, but also new groups who are new to the market or were previously expanding or are in those growth sectors like chemical or cleaning products, manufacturing or distribution related companies, or any kind of critical operational facility that has, for instance, government, state, or citywide contracts that they're responsible for fulfilling. Those contracts are still going forward. So there's a lot of bright spots, and it's important that you focus as a broker for your owners on companies that are out there operating in this environment still and are probably in some cases working harder than they were prior to this because their unique specialty is higher in demand now than it was just a few weeks ago. So just because we have this current blip that we're dealing with doesn't mean you should pull back from your activities as a broker. In fact, I would argue you have to go harder, faster, and smarter. You have to double down on your marketing. You have to invest more in your team, invest more in your infrastructure, pay your employees well, and be aggressive because this is a once-in-a-lifetime opportunity to gain more market share. So instead of putting your head in the sand like a lot of people are talking about, unfortunately, I would argue the opposite is needed, that you need to go harder, faster, smarter.
What long-term impacts, if any, do you foresee on real estate markets as a result of the current pandemic response?
So I do think industrial is going to benefit, be a net positive gain from this event. It's tough to look at it as any kind of a silver lining, and that's not my intention at all. But industrial is certainly a bright spot. I do think it will be impacted the least out of all the different asset classes. Multifamily and apartments are doing well. Office will come back eventually. Retail will also rebound, although it might look a little bit different. At the end of the day, industrial is poised to do the best, which is ironic because industrial has been the favored asset class of the investing elite for the last 2, maybe 3 years. It's really caught on, and most institutions and life companies are underweight industrial. I think that this event will push them to invest even further in industrial once things start getting back going again. So after this is over and people start getting back to it, I think everyone should be on the lookout for industrial to gain a lot of momentum. So look, at the end of the day, this is a temporary situation. The whole world is focused on solving this problem. It's never happened before in the history of the planet that everyone is so motivated to get one thing done and get it done as fast as possible. I'm very encouraged by that. In fact, it's got me getting goosebumps right now just thinking about how everyone collectively is working really, really hard towards the same goal. I think it's fantastic. And I think at the end of the day, we'll persevere. And this thing will eventually be behind us in a distant memory. And I think the world will be a lot stronger coming out of it than weaker.
I think that's a happy note we can end on.
Okay.
Yeah, thank you, Larry.
I really appreciate your time.
If you'd like more content on marketing in challenging times, perhaps beyond real estate,
any time that we can use new technologies to tell our story in a more unique, engaging way, in a way that really captures audience attention and pulls them into what we have to say and starts dialogue, it's a valuable opportunity.
If you haven't already, check out episode 61, where Sarah Manoni of Trek discusses some exciting new technologies that have real marketing applications that you can use today. Well, that's all we have today. As always, thank you for listening, and we'll see you on the next episode.
This has been Inside Forbes Councils. Please be sure to subscribe to us on iTunes, Spotify, or wherever you get your podcasts. If you're a member of the Forbes Councils and would like to participate in our podcast series, please email your member concierge. If you're interested in joining a Forbes Council, learn more at ForbesCouncils.com.